Good afternoon. Good afternoon, everyone. It's the 5th of February, Monday. Welcome to a brand new edition of Market Mondays. I'm Tilan Wickramasinghe, the head of research for Maybank in Singapore. Meta turns 20 years old, or as it was called, the Facebook.com. Makes you feel old, but it has been one of the Magnificent Seven that has been helping the S&P reach new highs last week. The ASEAN markets have actually been doing pretty well themselves. But how does that all tie into how the week will look going into Singapore this week? Weak job growth numbers coming from Singapore in the worst in about 2 years. But we've got the budget coming out on the 16th of February after Chinese New Year. So are there any special ang paos there? We've got Brian, our economist, who's going to be online to talk us through that. The banks start reporting their fourth quarter results with DBS on Wednesday. What's in store for that? Is this the right time to buy back into the sector? I'll take you through that in a little while. Then we've got Seng Yao from our quants team, who've been busy working on how to position for this year. And he's going to be talking about the latest model portfolios. And then finally, we've got Nick, our charts guy, and he's got some great ideas to trade going into Chinese New Year as well. But as usual, let's start with the market movers for last week. If you haven't downloaded our newsletter, please do so by using the QR code or through the Maybank app. Generally green across most of the markets. We saw very strong performance from the US markets. The Nasdaq's up about 1.7, the S&P's up about 1.1, largely from coming from the soft landing scenario there. That might have a little bit more of a choppier session this week, given what the Fed chair talked about in 60 Minutes just last week in terms of the fact that you may not see any rate cuts coming in March. Most of the Southeast Asian markets were quite strong as well. The STI up about 1.2%. The SET also up in Thailand about 1.2%. And the KLCI up about 0.2%. The only major outlier was the Chinese markets as well as Hong Kong, where we haven't really seen any sort of major drivers to prop up that market, and you still continue to see foreign selling. Now, let's turn to the budget that's coming out. Probably the last one from the Finance Minister Lawrence Wong before he switches roles and becomes Prime Minister, most likely in November this year. Brian, you've published a preview. Now, before we go to what the outlook for the 2024 budget is, how do you expect the 2023 budget to close?
Yeah, hi, Dylan. Thanks for having me. Yeah, so we think the budget last year turned out better than expected. It looks like it's going to be a surplus of about 0.5% of GDP, which is better than the 0.1% deficit that the government was looking at. So one of the surprising numbers to us was that operating revenue rose by 15% year on year in the first 8 months of the fiscal year. And this was despite a sluggish economy. I think in particular for corporate tax collections, they actually jumped 27%. Now, expenditure was trailing behind budget projections, but it probably accelerated in the remainder of the financial year with the disbursement of cost of living handouts, cost of living package, which was announced in the fourth quarter and all that. Back to you, Tilan.
Thanks, Brian. So, starting from there, 2024, what do you think will be the highlights, and do you think there'll be a lot of ang paos out there?
Yeah, so let's start with the numbers first. So we're expecting a small fiscal deficit this time of about 0.5% of GDP. We think that fiscal spending will likely be ramped up to fund the new Forward Singapore social programs, and there should also be some measures to defray costs and improve competitiveness, and maybe hopefully a small ang pao as well, since it's a pre-election budget. We think revenue should remain robust given the economic recovery. And bear in mind there are also taxes hikes in some taxes this year, including the GST, carbon taxes, personal income taxes, and also your property taxes. So this budget will be the fifth and possibly the final budget of the electoral term. There's this fiscal rule where cumulative fiscal balances must not be in deficit. When we look at the cumulative net fiscal position, it was a deficit of about 5.6 billion Sing dollars by our estimates. But we note that a large amount was actually transferred to endowments and trust funds, which was not immediately spent and need not be counted, and therefore the government still has a leeway to run a deficit and ramp up on spending, maybe give more handouts and all that. So I think on to the details, we think there will be comprehensive measures to bolster social trampolines and promote inclusivity. This includes time-bound unemployment support tied to upskilling. There will likely be a more comprehensive skills future program, perhaps top-ups for mid-career workers, so more money to go for training, and also initiatives to support lower income households and IT graduates, uplift their incomes. We think there could be a hike to the local qualifying salary, which is the de facto minimum wage for Singapore that currently stands at $1,400. The progressive wage model could also be expanded to more sectors and occupations. We think there will likely be a pause on wealth taxes after the steep hikes, to your ARF, property tax, also the personal income tax for the top end in the past two budgets. More details will also be provided on the $7 billion modular package, which is for young seniors to support active aging and boost retirement adequacy. I think the big thing that matters possibly for the markets will be incentives on the green transition, such as possible incentives for investments in regional clean energy projects and distribution infrastructure. Let's not forget that Singapore has that 30% of renewable energy imports target by 2035. As for carbon taxes, we think the government is probably quite comfortable where it is. Carbon taxes just increased fivefold to $25 on 1st January. And I think the planned roadmap for Singapore carbon taxes are already one of the highest in Asia. With all that wage cost increases, we think the government is looking for ways to help firms cope with the wage adjustments. So there will probably be some enhancements to wage credit schemes where the government co-funds some of the wage increases. There will also be support for businesses to improve their competitiveness. This includes, encouraging investments in digital infrastructure, AI, internationalization, and ESG. We're also expecting some details on the BEPS, which is the global minimum tax, which Singapore will be implementing from January 2025. So there will be a top-up tax for 1,800 MNCs to 15%. We think the government will provide some estimates in this budget on how much additional revenue that it can get from this initial phase, but measures are also being studied to refund some of this back to the various MNCs. I think this could include, like your refundable tax credits for R&D and training. And yeah, I think last thing on the pre-election budget goodies, we think it's possible that the government could give some personal income tax rebates or corporate income tax rebates this time, this being, a possible pre-election budget. Back to you, Tilan.
Thanks, Brian. So a lot to unpack there. Social trampolines, more upskilling, broader skills futures, extending some of the minimum wage programs, as well as for companies as well, providing more support and relief for some of the higher wages, as well as some personal and corporate income tax reliefs. So quite a lot of initiatives to watch out for. So please do read our macro report in the daily today. But one of the good things with this sort of budgets is that it should help provide unemployment levels to remain low, as well as also give companies a lot more maneuverability in terms of where their margins go, and as well as where in terms of their balance sheets go. And that's actually positive for the banking sector, which is where I want to kind of jump off next, because the Singapore's largest sector in terms of the STI, it's about a third of the STI's market weighting. That's going to start reporting from Wednesday this week, DBS being the first off the bat. But not a lot of good news, though. We think that earnings momentum for the banks will start to slow. You may actually start to see on a quarter-on-quarter basis negative growth. And largely this is coming from two areas. One is loan growth will probably remain negative to end the year of 2023. You had a very slow China, very high interest rates, keeping borrowing limited, and also a very strong Sing dollar. So even though you may have seen some loan growth in some of the ASEAN countries, when you actually consolidate it back to the Singapore group level, a lot of that gains would have disappeared because of the strong Sing dollar. We also think that the net interest margins will start to get squeezed as funding costs start to rise. And we haven't really seen any Fed rate hikes since July last year. So, in terms of how much more banks can pre-price their loans higher, has become a lot more limited. You may see some bright spots in terms of investment income as well as trading income, given especially the December sort of market rallies that we saw. But wealth management overall will be a lot more weaker, so that will have an impact on non-interest income as well, and particularly in fee income. December the quarter tends to be seasonally a lot more weaker, and also interest rates were still high enough. I think a lot of the AUM would have still been parked in fixed deposits as opposed to other private banking activity. So, should we buy the banks at this stage? I think you need to be selective, especially because there is a very clear bright spot that I think that will come up in the fourth quarter, and that is dividends. All these banks are sitting on massive amounts of excess capital. They should also benefit from some of the new banking regulations, such as Basel IV, that is coming on stream. So I think overall, a lot of these banks will be a lot more happier to pay special dividends as well as increase their ordinary dividends. We think DBS has the highest chance of surprising on the upside in terms of special dividends, as well as hiking ordinary dividends, followed by UOB, who has also a history of special dividends as well. So that's something to watch out for. Do read our note for more details on that in the newsletter. Now, with that, let's move on to our quants team, and we've got Seng Yao on the line. And Seng Yao, looking back from around August last year, when I think you did this exercise last, what has been some of the key highlights for the market?
Hi, Dylan. Yes, towards the last quarter of 2023, we made a couple of key observations. And I guess the good news is that in your language earlier, we believe that there's some lung power left to actually push this market across the region higher. So let me break this down for you. Firstly, when we look at the ASEAN ex-Japan region, it's really evolved into a three-tier market. At the extreme end of the valuation range, we have India and Taiwan trading near their 75th percentile of their 5-year PE range. So it's very expensive for these two markets. And then at the opposite end of this spectrum, you have Hong Kong and China, which, as you alluded to earlier, they're basically oversold for reasons that some of the macroeconomic problems are resulting in capital flight and loss of confidence in the market. And then right here in the sweet spot in this range, you have ASEAN markets, which sits basically they're undervalued. And the key theme that is underpinning this nice story here is that US, which buys a lot from this region, which is an exporters region, is doing fairly well. And we think that the US economy, especially with last week's jobs data, we think that that's going to continue, and that this kind of recession scenario, at least temporarily, is out of the window in the medium term. And so we see that for some of the export markets, including Singapore, Malaysia, and Vietnam, clearly the exports green shoots recovery theme is playing out very nicely. Now, what could actually push this a bit further is Hong Kong, China, but a couple of things need to happen first. So as we discussed earlier, there's a lot of capital flight at this moment. And we know that the weak property sector is not helping things a lot. Now, last year in 2023, the fiscal deficit came in at about 3.8% of GDP. This year, I think the forecast or the kind of explicit government target is about 3% negative a deficit for 2024. But we think that from speaking with our economics team, the Chinese government will really need to hit about 4% fiscal deficit to really put a stop to all of this fear, and which would then potentially re-stimulate the economy. So if that happens, I think again that would be positive for ASEAN markets, which will again push the valuations further ahead.
Got it. So, bargain basement valuations in ASEAN, very strong valuations in the US, and that market continues to perform, and still a bit uncertainty around China and North Asia. So, what should investors do, especially in the context of these model portfolios?
Okay, so if you look at ASEAN as a region, and we mentioned earlier that it's in very good sweet spot at this moment. A lot of the cherry pickings from the investors have actually come in, at the end where people are just buying quality names and value names, right? But for the other factor styles, for example, growth and momentum, we can see for a fact that none of the markets are in these factor styles in a major way. So in our latest rebalancing, we've actually put more focus in these two buckets. And the kind of three key markets that I can break down for you is that if we look at Singapore, we like CSE Global, we like SGX. In Malaysia, we like the energy-related names, Wasco, we like Valestro, and we also like Genting Berhad for Malaysia. And in Hong Kong, if we are to basically take a view that there is some hope of a recovery in 2024, then growth names and momentum names would likely be quite good but selective exposure for our clients. And here for these markets, we like things like BYD, Xiaomi, things that basically have a higher beta to the market in general.
Excellent. So, Seng Yao, investors can access these portfolios on the app and as well as on the report.
Yes, absolutely. You can go to our market insight section of the trading app to view these model portfolios, or you can basically download a copy of the PDF to look at the latest rebalances.
Excellent. Thanks, Seng Yao, for joining.
Thank you.
Okay, let's now move to our technical side, and we've got Nick, our charts guy, online. And Nick, what have you got for us?
Thank you, Dylan. Thank you for having me today. All right. So for this week, we have two trading ideas. The first one will be SINGTEL. So if you look on the chart, overall, in terms of the perspective of the technical, there is some sort of consolidation within a small triangle seen at the start of the year, which happened to be a breakout move last Friday. Although today's, if you look on the reaction today's, there a little bit what we call that a pullback, but the pullback, as long the stock did not break below our immediate support at 2.33 Sing dollar, I think the structure is still pretty much intact. And in fact, I do think that it would create some sort of the a hidden bullish divergence against the trend indicator. But regardless, if you look on the screen, the trend structure is it's still pretty much appealing. You see a series of the higher structure, both stock and RSI suggesting the momentum is remain on the upside. So because of that, we think once selling pressure is normalized, we're expecting a further up move as the stock could actually challenging the next upper resistance at 2.59 and 2.74 between the short to medium term trend. So that's the first one. The second one we have will be venture. Yes, the venture. Now, what make interesting is if you look on the top of the chart, there are I draw we call it a small downtrend channel between the RSI lines. So this channel happened to be taken out last Friday, so indicating that momentum is actually getting, I would say, a second gear. So which means the higher momentum could actually continue to drive the stock price higher. So if you look on the overall trend structure, the stock is pretty much consistently trading above the 13, 33, and 80-day moving average, build up a new series of higher structure since back in November last year. So building on that, we think the pickup in overall interest could actually continue to push the stock higher as we put our technical target at 14.75 and 15.95 Sing dollar, while the colors will be below at 12.95 US dollar. That's all for me, Dylan.
Brilliant. Thanks, Nick. And in fact, both SINGTEL and Venture we have buys on these stocks from a fundamental point of view as well. So the technical analysis dovetails very well with that. So please do take a look at Nick's analysis as well on the newsletter. We are very short on time, so let's quickly look at some of the upcoming events. A lot of results coming through. We are in the thick of results, fourth quarter results season in Singapore. As I said, DBS out on the 7th of February, StarHub out on the 8th. Manulife US Street, I think a lot of investors have a lot of focus there, especially in terms of getting some idea on the US office sector. That's also out on the 8th of February. And then in terms of events, we've got quite a few that's happening. We have got the Feng Shui event with Master Ken Ko happening today which is the 5th of February. We also got the Thai Contractors Day happening on the 6th. And then a very interesting expert session on the direction of China and the Chinese markets on the 7th of February. There was a question from the audience on how do you sign up for these things. Please, you can speak to your salesperson or you can send an email to customer service and they will be able to help you sign up for these events. Now, with that, we are out of time. Given that it's the Chinese New Year weekend next week, we will be off on Monday, but we will be back with the show on Tuesday, the 13th of February. So please do join us for that, and please enjoy the week, and please enjoy the time with your families for Chinese New Year. Gong Xi Fa Chai, and see you soon.